What explains all this M&A activity, and are there some core themes that sit underneath it? Yes, I think there are. My perspective is, number one, there was a lot of M&A activity simply fueled by the desire for growth. And there's no question that's the case. Public companies, they're paid to deliver growth. And therefore, in a world where money is so cheap, deploying more of it, and interest rates are going up now, but still on a long-term basis, super cheap, lowest 10% in recorded history. So low cost of capital, public companies with pressure to deploy, and private equity firms who are paid to write checks and not sit on money. For all those reasons, deal activity in aggregate went up. But within that, were there some themes? Yes. One theme I would say is consolidation. So that's a company that's in one area buying a head-to-head competitor to expand their relative market share. An example would be in next day delivery. You got UPS and FedEx, but then underneath that, the second tier of companies, not as big as a $100 billion giant, but aspiring to get there, LaserShip bought On Track to build a denser regional network for next day. A second theme would be e-commerce moving into logistics. I mentioned the Uber Transplace acquisition. Uber Freight, of course, a tech-enabled truck broker. Transplace, a domestic but with global aspirations. Transportation management company, a multi-billion-dollar business. I think you'll see more of that. Third would be going the other way, logistics companies moving into e-commerce. So Maersk, the steamship giant, Maersk made $17 billion last year, which was an all-time profit record. And they used some of that to go buy an e-commerce logistics company called Visible SEM. A fourth would be infrastructure giants that are moving into services. So I mentioned the Port of Singapore Authority buying BDP. Port of Singapore Authority, as the name suggests, ports and infrastructure. BDP, Philadelphia-based global freight forwarder, and that reflects this desire to combine capabilities. And then lastly, in a bit of a curveball, retailers deciding to take control of their own supply chain. So American Eagle Outfitters bought Quiet Logistics and Airterra, giving them robotics and a last mile network. Why'd they do that? One reason was because retailers like American Eagle are saying, hey, if I can't count on other transportation companies because there's a capacity shortage. UPS and FedEx are passing through 6% general rate increases, more waves of those GRIs coming down the pike, and also simply not serving some customers that don't fit within their parameters. And then similarly, you look at the delays on the shipping side and the 100 plus ships off the port of LA Long Beach. A lot of retailers are saying, hey, I don't want to be at risk that I can't meet customer demand. And so they're taking that into their own hands and going to buy logistics companies. So I think those five themes are all real drivers last year that will continue to matter this year.